This is Christopher Mullen from thegoldanoilguy.com. It is Tuesday, October the 15th. I want to give you a quick update here on why investors must be cautious at these prices with the stock market here. Now, if we just take a look at this report I did this evening, you can see we've got some pretty serious issues coming in here. Let me just pull down to the charts. You can see we've got some divergence going on here with the SP 500 and the relative strength index. Now, the relative strength index has these red lines across the chart. You can see here we're getting some divergence while the stock market climbs. The last time we had this happen, when the market became overbought with stochastics, we ended up seeing some pretty strong divergence, and then the market actually had a sharp breakdown to the downside. Now we're having a similar setup again. We're seeing some strong divergence right after a overbought level. The market has been continuing to work its way up. It's starting to become choppy, showing that there's a struggle between the bulls and the bears, that more or less it's having a harder time moving to new highs. And I think we could be setting up here, especially to see what happens out of Washington this week. We could trigger a pretty big landslide going forward. Now, if we look down at the charts for some more divergence, we can look at the bullish percent index on the NYSE. Now here, if we look at this chart, you can see we've got the purple line, which is the bullish percent index. It has been forming declining highs, while this black line here, the NYSE composite, we've seen it continue to push up to new highs. So this is a sign that fewer and fewer stocks are actually making new highs, yet the overall market continues to climb. So there's less stocks that are doing more work, and when those leading stocks start to sell off, we're going to see a pretty sharp slide in the market, and it could be a substantial up to maybe even a 30% sell-off in the broad market in the coming months. Now, if we just take a look at a couple strong sectors, here's the technology sector. It's been doing really well. It still looks very strong, but we have to be cautious. There's a very clear support trend line here that the price has been bouncing off of, working its way up. It's getting into this rising wedge here, which eventually, when it breaks this support trend line, there are going to be a lot of these pivot lows here that are going to act as support zones, but once they break, they are going to trigger a lot of stops. And once you get this waterfall sell-off, it'll just start triggering a lot of these stops. Eventually you'll get oversold, have some type of bounce and pause. We'll probably see a continued move to the downside. So we've got to be very cautious going forward. This chart still looks good, but it is getting into the apex. Usually when a move gets to the apex of something, it usually becomes has a bearish bias. And again, once we start to crack through the support trend line, you better look out below, because the technology is a very heavy weighted sector and it'll pull the broad market down very quickly. Now, if we take a look at another sector here, the financials, very powerful index also. It's starting to show some characteristics that we've seen in the past. We had the market become overbought here back in 2011. I showed you on the stochastics divergence. In here, price, it's hard to see. I have the chart zoomed out quite a bit, but price became fairly choppy and started to have a very scattered look to it. Very similar to what we're seeing in the last couple months here. Prices becoming scattered and chopping around, and we've got that same overbought signal that happened on the stochastics, or sorry, the RSI, relative strength index, which is overbought and now showing some divergence to the downside. And we've got this mini head and shoulders pattern forming on the financials that if this breaks down, we're actually going to see a fairly significant move to the downside, with a downside target around the 17 or 18 area. Now, putting all that together, if we take a look at the really big picture, you can see we could be possibly nearing a fairly significant top. We have had a 4-year bull market. That is a typical length of a bull market rally, and we are now moving to some new highs. Usually you'll see the market break to new highs. It'll just pierce it, and then you'll see it break to the downside. We've done that same thing. We've rallied up. We have now broken to new highs. Everything is starting to get overbought, and we're starting to see some pretty strong divergence with the equities market moving higher with fewer and fewer stocks. And once that starts to sell off, we should expect a very strong move to the downside. That'll typically last about 18 months, and it'll be very, very severe and quick. And if you're not sure how to play a bear market, it's the time to start looking into it, because it has to be very actively traded. Moves happen extremely fast and very violent. You get some of the sharpest rallies after a sharp sell-off. So there's a lot of short covering rallies. So it's something very interesting. It's something you need to learn and master, because eventually we're going to have this downdraft, and you can make a lot more money in about 18 months than you will in this 4-year bull market decline. So this is a key part of the market you need to understand and have a trading strategy for. Anyways, that's it. I just wanted to give a quick update on what the overall market is doing. And in conclusion, I just want to point out here that these are some major divergences in the financial market, and divergences aren't great on timing. They're more of a warning indicator telling us to be aware that something big is about to happen. You can't just trade off them just because there's divergence. You have to actually wait for the stock market to crack and break to the downside and actually start to have the technical analysis actually forming a downtrend before you really jump on the bear market train. But this is some pretty important information that I think we could start to see play out here, depending on what happens in Washington in a couple days. Anyways, that's it for now. Talk to you in a bit. Bye-bye.